What's going on, traders? Welcome back to my YouTube channel. And on the chart we have a nice bullish uptrend, and if you take a look at this trend, you can see that there are swings, and for some reason you can see the prices are turning and bouncing away from here. And you may be wondering, why is that happening and how can you catch these swings, and what is the reason why prices actually bounce off here? And the reason is fairly simple. And despite what many traders teach you, the market geometry is very real, and technical analysis, if you learn it properly, is very real. So the reason why these bounces occur right here is this trend line. And this is the tool that I use and that I teach you guys how to find this. This is the tool that will help you to find these high probability setups, because this is basically what we are on this channel doing. We are just looking for the highest probability setups as possible, and these setups are second entries with the trend at key entry points. The key entry points are trend lines, EMA, support and resistance lines. And second entries, why second entries? It is because it is connected to human psychology. When we fail at some things as a human beings in real life, we will normally attempt to do it once more before we give up on this. So the second entries are such a powerful setups. Big market moves into, this is a fairly common occurrence in markets. So second entries, very powerful setup. And so second entry longs with the trend, we're in an uptrend, and failed second entry shorts because we're looking to find the people who went short in an uptrend, which is a mistake, and they went short way too early. So we're trying to capitalize on their mistakes. This is unfortunately how trading works. It is a zero-sum game, and I want to teach you guys how to be on the winning side, how to be the smart trader. So this is the reason why prices bounce off here, and this is the reason, this is the tool how you can effectively find these places to go long. And you can see it end up working on the bigger picture. And just to shortly recap, the trend lines, there's a rule of trend lines in the market, in the trading, and it's called trend line rules. And that means that after break of a trend line, there is going to be most likely a retest of a new extreme. And after there is a retest of a new extreme, just like we have a break, attempt to make a new high right here, there's going to be a correction or possibly a full-blown reversal. So that's the trend line rules. But like I said earlier, what I'm teaching you guys is just to find the highest probability setups as possible, because even though this is an uptrend, EMA is putting up higher, the bars are, small, and the trend is fairly healthy. You don't just want to go long all over the chart. You just don't want to buy all over the chart. You want to wait for the best setups at the key entry points. And just remember, there are two things I want to talk about here. When you're trading a trend like this, even though it seems fairly easy, for a lot of beginners, it is not that easy, because they're way too scared, and they email me, they're way too scared to go long deep at these pullbacks. But this is exactly where you need to go long. Remember, the deeper the pullback is, the lower you buy, the safer it is, and the higher probability that is the trade is going to work. So remember, the deeper you go, the safer the trade is. The more you wait till market will prove, because you will always pay a small price for additional information from the market. Market is not your friend, and the more information it gives you, it wants something away from you. So there's always risk behind that if you get the more information market gives you. Just like, for example, right here, you go long above this pullback, and if you wait and you go long here, you already missed a big portion of this move and potentially your scalp. I mean, hindsight, it works here nicely. So it seems like this was a perfect trade. It was a good trade. I mean, don't get me wrong, but it is a little bit more risky, a little bit riskier than to go long here, because the more information market gives you, you have to pay a little bit, and you pay in the risk you take. So let's start over what I was looking at. I was looking at the start, I didn't know this was going to be a spike in a channel like this. Early on, I was looking for the shorter term trend line, something like this, or something like this, or I was moving in the round, something like this. But we end up swinging up and down, and it's starting to look like we have a one leg, and prices just kind of consolidated, and the trend, got a little bit more shallow, a little bit more narrow. And once we bounce right here, this is where I drew the trend line. Once we bounce right here, I didn't have the trend line in place yet, but with this bounce, with this rally off right here, this is the 3 touches of the trend line. So I copied it, put it to the top, and this was the trend line that I found. But okay, now that we know that I'm looking for second entry longs or failed second entry shorts at key entry points, I also need to pay attention to these corrections. I also need to draw the trend lines because they work the same way as the bigger pattern. Don't neglect short-term trend lines. They work the same way as the bigger pattern. I am paying attention because I want to know where exactly can I go short, because sometimes where I can go long, where I can keep continuing buying. And this is why I drew the short-term trend lines, to know that there is a break of this trend line and a new extreme. So let's start off right here. We have a new high, broken up lower, we have a break and a new low. From this point on, I can expect some sort of bounce over here, and I can be looking for reasons to go long. We're working up higher. Once again, two-legged move. First leg, consolidation. Second leg, we have this trend line working lower. We have a break and a new low. Okay, now it is safe for me to start thinking going long, because this correction has played out. This bearish downtrend, even though it is shorter term one, it is still a downtrend and it played out, and I need to respect this. And at this point on, it doesn't seem like a strong market yet, so I really need to pay attention to this. And we have a new low right here. First entry short, pullback, second entry short. Fourth bounce off the trend line, second entry short. Let me grab the arrow. I didn't delete all of them. This is the second entry short that failed. The bar has, when we are going long, we are obviously looking for bullish bars, as bullish as possible. And even though there is a one tick bearish body, it's still a bullish bar, because look at the tail, look at the wick. This is a reversal bar, and we traded up lower during the bar, and at the very close we traded up higher. So there was a bullish activity there was a bullish power, buying power happening at the very close. This is what I want to see. So 2 failed attempts to go short, and we're bouncing off the trend line. So good setup right here, high probability setup. And now we have a new high right here, and this is just a first entry. So this is not second entry, but even though it is a first entry, you cannot ignore how many times we already bounced the trend line. And it's so valid, the trend line is so valid, you have to take a chance here, you really do. And this is the higher low, because notice how you push through EMA, the EMA is putting no resistance, and you pull back, EMA is holding prices, nice reversal bullish bar. The safer it is to go long here. Here, what can happen is you can push a little bit higher, pull back a little bit lower, and you can get stopped out and then go higher just to see where you thought it was gonna go. So remember, you want to buy these pullbacks. It is scary, I know, it is counterintuitive. This is why the trading is difficult, because people think they see the market reversing in the opposite direction and they think market is reversing. But no, we're just trapping the people who don't know what they're doing, and we're taking advantage of them. So market is trading up higher, and we don't want to go long here. Why? We are not at the key entry point. This is not high probability setup. Anything can happen here. Even though it would have worked, we are in the middle of the trend channel. You're not even close to another key entry point, which is key EMA, exponential movement average. This is a 21 bar EMA. Skip this. You have a new high right here. You push through the EMA and you try to go long, but you're not close enough to the key entry point. And this is the first break, and I was expecting a new low right here. And take a look how EMA is flat. This is a congestion. This right here, what you see, is what I call congestion. The EMA is flat. It is exactly in the middle of those bars. The bars are stacked next to each other. You cannot go both highs, both lows. And the only way to trade this is to fade the breakout. But we broke higher, but you don't want to fade the breakout to sell this, because this is an uptrend. So if we broke lower, you want to fade the breakout that way. You want to go long here. And even though this is a congestion and you want to skip taking trades here, it still would have worked, yes. But I would be okay buying this congestion if we touch the trend line. If this leg continue lower and we bounce off trend line, then it will be okay to take in a shot, because this trend is starting to look fairly strong. You have a new high right here. You have a pullback. First entry long, pullback. Second entry long trigger one tick higher above this bar. But once again, you're far away from key entry point. So even though this is a second entry long, it is a doji bar, so not a good bar either to take. And this was the proper trade. We touch the key entry point once again. You have a break and a new low, so this downtrend is over. So I can safely be looking for longs, which is what I want to see when I'm focusing. And you can see how market reversed from here, and you get another chance. You actually get a Look at this nice bearish bar. Somebody actually sold this market directly into this trend line. If you don't have the trend line in play, it may seem pretty tempting, but this is why I teach you guys how to find this, this will give you such an amazing edge. And they trapped all the shorts, higher low. This is the higher low of this trade. It's the same way this is the higher low of this trade. One more push lower, higher low, trend line still holding. This is what you want to see. You get another bounce of trend line, but at this point on, this is a gigantic bar. You would be risking a lot of money. And you can see how market is starting to look fairly strong here. And this is why I actually took this trade and I had a loser right here. This is the new high, first entry long, pull back, second entry long, and I knew that I was taking a chance that we need to make a new low, but I was, betting, and I was, taking my chance that this market is starting to be so strong that you might not even get it to the trend line. So I took a chance right here. I got stopped out, and I actually re-entered exactly on this bar because I had to re-enter here. This is another bounce off the trend line. You have a break, attempt to make a new low, and it is a fell break lower. You can see this congestion right here. Once again, go check the video about the EMA. I talk about congestion. EMA is flat in the middle of those bars. Bars are stacked up next to each other, and the only way to trade it is to fade the breakout. And you can see you broke lower. This is why there's such a stem here, why there's such a wick. You broke lower and then traded up higher, and it's off the trend line. Nice bullish bar. Take this trade according to our rules, and market is really starting to look strong. But once again, I'm drawing these trend lines. New high right here, pull back, first entry long, pull back, second entry long right here. You have a break and a new low at the key entry point at the EMA. So this was a good trade. I didn't take this trade, unfortunately. And then you have a two-legged pullback, first leg, pullback, second leg to the EMA. I tried to take this trade, but I put my limit order a little bit back, and prices didn't fill the limit order and continue rally up without me. So that happens. And once again, you have a first entry long, pullback, second entry long at the trend line. So I didn't take this trade, and I was afraid of this trend line. But this is the point. This right here, I was really respecting this trend lines and waiting for a new low, breaking a new low, because now it's not sure that this is an uptrend and it's not strong. But as the day goes on, you can see the trend is getting stronger and stronger. The bars are smaller and smaller, and the trend still keeps 45-degree angle. This is a healthy trend. The trend that goes 90-degree up or something like that, it's not healthy. Healthy is if it's somewhat flat, 45-degree angle. This is a perfect trend health, 45-degree angle. This is a perfect healthy trend. So remember, don't expect trends to last if they are very steep. They're not gonna last like that. And I actually took this first entry right here because once again we bounced the key entry point. It is just the first entry, but the market is so strong, you just have to take the chance, and you have to buy these deep pullbacks. Once again, deep pullback, you have to be willing to take the chance. And you have a first entry short, you rally through the EMA, second entry short, we touch the key entry point, EMA is holding, reverse the bar. According to our rules, high probability setup, failed, second entry short, excuse me. And you have a break and a new high. So you can see price action works to the T, and this is the bigger picture. So hopefully you guys get the idea how you should be looking for the best trades, how to find the best trades, wait for second entries, let these shorter term trend lines play out, and trading can become very simple. You don't need no fancy indicators. You don't need to find the perfect combination of 300 indicators and wait for arrow here, wait for signal here, stochastic, Ichimoku cloud. It all sounds fancy, but it's created and it's marketed for people who don't know what they're doing, and they're selling a lot of junk because that's what sells. But this is actually how you make the money if you learn to read the chart. And this is such a good day that we don't get a lot of days like this, because we as a day traders, we would like to have this day every single day, because you could really make a ton of money on the day like this. Trading is so easy on a day like this. You can make a month worth of profits on the day like this. But we normally get like one or two big trends up or down where you can really capitalize. and really make some money. But you know, take advantage of these days, and if you just follow the rules, you almost cannot go wrong. Even though I took a loser here, you know, the loser was nothing compared to the winners that I had. So you know, trading is a game of odds, and my goal here is to teach you guys how to put your odds on your side, how to be the casino. You don't want to be the people who's playing the slots. You want to be you want to be the owner of the slot machine, so you have the odds on your favor, and this strategy gives you the odds on your favor, on your side, in your favor. So hopefully you guys enjoyed the video. If you liked the video, if you made it to the very end, please hit the like button. I would really appreciate it. And if you are interested in learning about trading and how to make money in trading, feel free to subscribe. There's plenty more videos. So I wish you guys safe trading, and I see you guys in the next one. Bye guys.